Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today I'm going to look back at an Apple stock price prediction I made for the fiscal year of 2021. This video came back out in August. It was one of my most popular videos. So I thought I'd check in with Apple stock. It's been a few months and see how that price projection's holding up. Please remember that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research and due diligence before investing in any stock. And of course, if you like stock market analysis and going deep on stocks like Apple, then please subscribe to the 40 Finance channel. Thank you to everyone who has supported the channel so far. All right, so as I mentioned, we're looking back at a video I did, looks like on August 29th, 2020. And this was a big video for me, quite honestly, because I don't normally get 60,000 views on my content. So with it being so popular, I thought it was important to go back and revisit it and just see, how the accuracy is trending up to today. Note that this price projection came out before the stock split. So when you see this SS, this is, of course, incorporating the stock split. And I was projecting $130.50, and that takes into account an $18 EPS prior to the stock split, a 29 PE, so that brought us to 522, which was pre-split numbers. And at that time, it was only about a 4.6% gain. So let's dig into those numbers and see where Apple stands today. Okay, this is the original image that I took from Apple stock back, whatever it was, August 28th or something like that. The price that day was $4.99. If you divided that by 4, you had a stock split price of $124.76. And P ratio at that time was 37.85. And you had an EPS of $3.29, give or take a penny. After the stock split, the actual EPS was $13.19, but divide by 4 and you land somewhere in the neighborhood of $3.29. And since it was in August, you had come back all the way from the pandemic dip, and Apple was really moseying quite along. As a matter of fact, they hit a huge burst when they announced the stock split as more investors came in. So perhaps it was the attraction of this upcoming stock split and the fact that Apple's price would be cheaper, making it more accessible to folks who didn't have, $500 laying around for a full share. All right, so here's where we stand today on November 30th. We have survived the stock split, okay? And it's $118.43, so it's actually down $6 or so from the number that we saw back in late August. Up a couple bucks here today, it looks like. And the P ratio has dropped, so it was in the 37s, and now it's in the 35s. The EPS has basically remained flat. And you look at the last 6 months on the chart, so this does not include the pandemic. This is simply the rise. And you can see here's where we were on August 28th in the neighborhood of 125. And since the stock split has come out, it's just sort of been up and down a little bit, but really stayed in this trading range of $118 or so. So not a lot of movement since the stock split news. So officially, I made a little note here. 3 months later since that video, our EPS numbers are basically flat, even though we added a quarterly report in there. And the PE was down about 2 points. All right, so just to remind you how I look at making price projections, it's a very simple formula. Price equals PE times the trailing 12 months EPS, right? And so you sort of make a projection on PE, which is the hard part. And EPS projection, that's, that takes a little bit of digging too, but the larger a stock is, so the bigger the market cap, the easier kind of EPS gets, for at least for profitable companies. But that's how we get it, right? We just pick a PE, we look for analysts on EPS numbers, and then that gives us a price depending on the date in the future that we're looking for. You have a fiscal year that runs October through September. Next earnings report is 10/31. This is leftover from my last presentation, so ignore that. But this prediction is for October 2021. You can see September will be the end of the fiscal year, but it takes them about a month, just like it did here, to actually report those fiscal year earnings. So we're really targeting October 21st and see what Apple's fiscal year 21 looks like. That's when this price would be delivered. And of course, reminder that it's my subjective data across the board. Things change, notably PE, EPS, if there's a great sale for the iPhones, EPS can go up more than expected. It can fall short of expectations. The economy has obviously been a roller coaster ride, so we're just really doing the best we can here. Okay, on the EPS side of things for 2021, the average estimate for EPS is $3.95. You do have a high of $4.45 for next fiscal year. The last time I did this back in August, I projected a $4.50 EPS. I called it a little higher because I knew that the new iPhones were coming out, and I also knew that there would likely be pent-up demand for some items coming out of the pandemic, I should say. So that appears to be high, as I put here. That's high, but sticking with it. I'm definitely above the high estimate on the analyst side, but I'm sticking with it most notably because as each quarter comes out, analysts have the luxury of making updates to their projections, and I've noticed that Apple's EPS numbers, EPS projections rather, over time, they tend to creep up as the year goes on. So I'm sticking with my 450. So we've got our EPS number. Now we have to make a guess on where the PE will stand for Apple. So again, you're in a 35, 36 range right now. That is what Apple is trading at, 35 to 36 times their earnings per share. Now, historically, they have been below 20, substantially below 20 in some cases, but most recently, you see in 2018, at the end of the fiscal year, they were at 20.41. At the end of the fiscal year 19, they were trading at 19. This year, though, they were up 15 points or so, and that has carried on through. I'm suggesting that EPS actually comes down, not because Apple's a bad company, just because we're running very hot on PEs across the entire stock market. So it's really, this is where the gamble is for me. What do I think is happening to PEs across next year? I know that we're going to have low interest rates, so I know that the stock market is still going to have a lot of interest, but I just think that the PEs come down a little bit, not all the way to historical levels because there's not a lot of other investing options, but it wouldn't surprise me anyway to see PEs come down, and that will affect the price. Now, in my August video, I had an estimate of a 29 PE, so I am adding another point to it here, mostly because this 35 number has stuck pretty well since the pandemic. So I'm going to add another point to my original projection of a 29 PE. Be real honest with you, the 29 is more logical from a historical standpoint, but it just doesn't seem like this market's going to cool down anytime soon. Okay, so bottom line, you see my new price target for September 2021. I'm sticking with a 450 EPS. I'm raising the PE plus 1 point to 30. That gives Apple a post-stock split price of $135 in and around Halloween of next year. That's up 13% from today. And the difference from my last video is this plus 13 is essentially representing Apple's stock valuation increase for the fiscal year. So at plus 13%, that feels pretty good for a company as large as Apple. Don't forget also that they have a dividend, so the total stock return is going to be more than that. and we won't know for sure till they announce, what their dividend level is going to be. All right, so let's try to get some context on my price of 135. We'll go through TipRanks here real quick. We're looking for the freshest analyst ratings, and all these are 20 days or less fresh, if you will. And you see a lot of analysts sandbagging, man, not making a price projection. And then the ones that do make price projections, you got 150, 150, 136, 144. So it's kind of all over the place. You do have buy ratings mostly across the board, and hold ratings. Hold isn't bad. It just means if you already have the stock, do nothing, basically. Hold for the long term, wait for perhaps a better price to average down. But I think Apple stock's in good shape. You can see, though, I don't feel bad with my 135. I think I'm coming in lower than some people, but I'm also above others. So I'm sitting there right in the middle. It feels pretty good to me. We'll have to see how it goes. All right, so I added a couple dollars to my Apple price projection update here. Back in August, I was at 130.50. By increasing the PE only one single point from a 29 PE to a 30, we jumped up to $135 even. That's why I always mention on this channel how important PE is and where you buy stocks at. Nothing changed in my earnings per share, so keep that in mind. In fact, my earnings per share were higher than most of the analysts that I saw there in Yahoo. So I'm projecting great things for Apple as a company, but I am suggesting that the demand or the stock market price to earnings ratio as a whole is going to go down for Apple stock. Doesn't mean they're bad, doesn't mean anything's going wrong. It just means that we are at the peak of stock market demand as a whole right now, hopefully the peak, because if P's get much higher, you're gonna have to start thinking about pumping the brakes for a little bit. Pretty much I already have. Just waiting on the sidelines for events to buy in at cheaper prices. All right, everybody, hope you enjoyed this revised look at my Apple stock price projection for 2021. Let me know what you think in the comments. Thank you for watching. We'll see you on the next video.